Good morning, it's Market Day Report. So glad you're with us here as we work our way through Tuesday. Now, let's get into the markets. We'll start with the corn market. It's been lower, was lower in the overnight session, and we're lower today, but probably don't need to give up on it yet. This market's been higher 2 straight sessions, 404 3/4 on the D's. That's the new crop, and it's down a penny 3/4. Of course, it's down as scouts are out as part of the Pro Farmer Crop Tour, Eastern and Western legs, and we'll have updates for you throughout the day on that. November, 1036 3/4, 4.5 lower on the bean market. And then let's hop over to the wheat market as well. It's off 2 3/4, trading $5 in Chicago. Kansas City, 5 1/4 lower at 501. Spring wheat contracts lower across the board, and the cotton market is off 30 at 67.51. Let's bring in Chris Swift, Swift Trading. He's in studio with us. And Chris, as we go through those numbers, any thoughts on what's happening in the row crops?
Well, not as much, but I like to see what the pro farmer's coming out with. You know, they go in there and they don't cherry pick any fields, and they have a tendency to look at every single aspect of it. And although I don't think they're going to find, any great big deficits out there whatsoever, what it kind of tells us to do is we got a lot of corn to have to chew through for another 12 months. So we better get busy now, and with all the demand aspects that we may or may not have on there, we still got marketing to do. And unfortunately, we're not got a very big carry out there into the future to market into. So there's going to have to be a lot of work done in being creative in how you market this crop. And some of that crop is just being marketed straight into livestock.
And we'll also have to keep an eye on the basis levels as well. That's kind of interesting. We step back and start looking at bases, depending upon where you are in the country.
Oh, sure, because we've already got harvest in place down south. So they've got some harvest taking place down there. We're cutting silage just about everywhere down south. It's now time to start cutting silage. So as we see the combines roll further north, then we get the real ideas of what the actual yield is. But again, I can't see a lot of variations between what USDA has said and probably what the Pro Farmer Tour may find.
And I'll say this softly, though. We don't trade sorghum or milo futures, did at one time. We don't do that anymore, but it trades off of what is happening in the corn market, because in many instances can be plugged right in place of corn.
Absolutely.
You have to be a little more creative if you're feeding it. You'll want to flake it up a little more. However, I throw that in because of so many acres of sorghum this year. I don't know if that's worked its way into the overall market perspective. If you've got a huge corn crop and you have a big sorghum crop, that could be interesting.
Well, and that's where we're seeing the lower cost of gains on cattle feed right now, because that is a huge cattle feed out there. So I think that's where we're seeing a lot of lower cost of gains, even though we're not necessarily seeing it in the price of corn right now.
And especially with trade shut down with China, because that's been the biggest market for those sorghum growers in the past. Mexico now back to #1 there, but it's taken away a lot of demand.
Oh, no doubt, no doubt.
Okay, we'll take a break. We'll come back in a moment. We'll talk about livestock. Market Day Report continues in a moment. Show list, smaller in Texas, or larger in Texas, but smaller in Kansas and Nebraska, and we don't have a really good handle on the asking price. Still waiting for that to develop, but we will see cash cattle trade this week. All right, let's go to, instead of live cattle to start here, let's start with the hog market. There's a method to the madness, maybe. October at 89.80, it's off 32 lower on the D's, and hogs trying to make it 3 days in a row in positive territory. Starts, though, in the red. What about feeders? Yesterday, we hit all-time highs in the feeder market, and look where we are on the September. 50 cents off the day's high at 352, now 15, 352.15 a hundredweight. It's up $1.22, front month at 350.02, and it's trading higher. Live cattle futures have been higher as well. Now the August stepping back a couple of pennies at 236.70, but the October at 231.30, up 12, and then roll out to the February, which is trading right now at a premium to the others, not counting August, but at a premium, 234.80. It's up 40. Chris Swift trading. Okay, Chris, that contract, that deferred contract, doesn't normally trade at a premium, does it?
No, but we're placing fewer cattle. That's the one thing we know, and all year long we've been doing that. And an interesting aspect, and you mentioned it, the new highs. Cattle and feeder cattle, the best as I could see, was the only commodity market that there is at all-time new highs right now. Even the equity market's topped on Friday, but it's the only one that I could find out there, and some of them at really low prices in comparison to what cattle are. And the only thing I can determine from that is clearly just simply we got way too much production and processing capacity for the number of animals out there. And now that it looks like we're going to keep the border shut for a little bit more, we're going to be at least void of that inventory for a while longer. And that just pits North and South feed yards against one another, trying to bring that inventory into them. And that's where we're seeing the feeder cattle price continue to move higher, but not necessarily fats. And fats, we believe that there may be a greater increase of long-fed cattle on feed more than 150 days simply because of the dramatic slaughter cuts that we've seen. Everyone out there is having to manipulate in some manner to try to bring in margin, except for those in the production side of the cattle right there. And even to the cattle feeder right now, we're seeing some instances where it's fantastic today, but even yesterday and today, we continue to put a wider spread between the starting feeder cattle and the finished fat, making those cost of gains that much more crucial.
You know, you're saying all this, and what an interesting conversation this is compared to where we were, what, 5 years ago?
Oh, absolutely.
Where it was just the opposite. We don't have enough processing capacity, and there's too much weight on the
cattle.
Yeah, exactly. And so our cow-calf guys and our feeders are losing money. Packers are making.
Right.
And now it's just upside down. And I guess it just does that.
Oh, it's a very cyclical market. So again, you got to remember it's cyclical, and therefore these high prices won't remain here forever. And it's been terrible actually trying to recommend making sales against this, because every day, including today, you've missed the mark. So it doesn't matter who you are or where you thought the best place to be was, it just keeps creeping higher. And it's fortunate for some, and it's very unfortunate for a lot of others that won't be able to participate in this going forward. And of course, we believe this will all be passed along straight to the consumer with boxes now 407, 408. So.
Wow. And we didn't even have time to talk about margin calls either.
Wow.
That's a whole nother conversation.
That's a whole segment right there.
Yeah, maybe next week we'll pick that up. So.
All right, sounds good.
I saw somebody post online yesterday from a restaurant in Las Vegas, one steak, $300. Not the bill.
Right.
One steak, $300.
Wow.
Yeah.
Unbelievable.
So, anyway, better taste good. All right. Thanks, guys.